The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
Well, there's a shoe company and a car company lighting up the value radar screen. Our value stock strategist Tracey Ryniec is going to tell us more about both of those. First one is Deckers. Now, they make footwear.
They do. Most people don't know of them because they have a kind of a weird name. I mean, what is Deckers? But they know their brands. They know UGG and they know Teva. Those are two of their biggest brands. UGG is their huge brand. And, you know, they make those boots that women have been wearing for forever, but they are more than the boots. Now, this last quarter, they just reported was, okay, it was in line with analyst estimates. This isn't their big quarter. I mean, obviously, it's going to be around the holiday season and winter because of the boots and other things, but this quarter, it just isn't what their main thing is. But they did reaffirm full year guidance, which we haven't seen with, you know, most companies. They're international, so they did have some currency issues, but they're able to overcome that right now. You can see with the estimates I put up here, this is the chart that, you know, puts out what they're going to be every year. They are still on track to do 10.5% EPS growth for this year. That's, again, really solid given everything we're seeing with the currency issues and things like that. And the brand, you know, still all their shoe brands are really strong right now, so they're not having any issues with anything like that. And as you can see, though, investors are a little bit concerned with where the growth is going to come from. They were concerned last quarter when the shares really sold off at the beginning of the year. They've kind of stayed down, you know, haven't really done much, but that's why they're cheap. They're trading at a little bit over 14 times. For any of the shoe manufacturers, that's really cheap. But even in retail in general, it's hard to find a retailer that's a value right now, especially one with strong brands like UGG has. So I like the story right here. If you're willing to be a little bit patient, you know, now might be the time to accumulate these shares.
Okay, then there is Group 1 Automotive. They actually are a dealer, right? They sell new and used cars?
That's right. Most people don't really follow this part of the car story. They follow General Motors or Toyota, of which I've talked about in the past.
Yeah.
But these are the retailers who, when you go to the Ford dealership, they own the dealership. And they own many different brands across the board, so they're not beholden to the popularity of, say, BMW versus, you know, Audi or something like that. Yeah. They're predominantly in the U.S., but they also have quite a bit now in the U.K. It's about 11% of their revenue. And you might think, oh, Europe, that might not be doing well right now. But the U.K. has really bounced back with auto sales, and both new and used were up over 20% this last quarter. That's better than what's happening here in the States. But the revenue for the U.S. side of the business was up 11%. They're seeing strong gains in both the parts and services, so all their different segments are doing well right now. One area that's a little bit weaker is Brazil. They bought some Brazilian auto retailers a couple of years ago, thinking that's going to be the next big market. I mean, look at just the size and growing middle class, and economy struggling now. So sales and the numbers out of Brazil were down, but that's only about 4% of revenue. But the Brazilian story is looking at the future. So they're still committed to Brazil, but it's going to be a little bit rough there for a little while. But as you can see these numbers, you can really see this year and next year earnings estimates jumping here. It's supposed to grow about 20% this year. They still see about 10 for next year, give or take. That may change. Everybody's expecting this story to kind of die down. Like, when will people stop buying cars? But they're not. We just got the auto numbers from the manufacturers themselves in for last month. They were much better than expected in the United States. They're on track for about 17.5 million cars this year, which is the highest since 2000. So this is where you're going to buy the cars. So the story's still there. I know a lot of people with the older cars, like they bought pre-recession, like 2007, 2008. That's considered old now, 8 years old. They want to trade in. They're either going to buy used or new. Both are hot areas. You can see the chart. It's trading near the highs here. Still cheap, around 13 times. Even at these highs, I still like all of these auto retailer plays here.
Considering that price of cars doesn't go down year over year, it only escalates. That is an interesting story.
Yeah.
That people are still buying cars.
Oh yeah, well, the financing is pretty beneficial to most of the buyers right now, and they are able to stretch out. You know, you used to get 5-year loans, now you can get 6, 7, even 8-year loans.
Yeah.
But it is allowing more people to get in on buying something new.
All right, do you own either one?
I do not.
All right, check out other stocks, stock picking strategies on our website, Zacks.com. And if you are watching this video out in syndication land, especially on YouTube, you know, if you're watching on YouTube, you can subscribe to these videos and even comment on them as well. So, with Tracey, I'm Terry Ruffalo.